guys. Currently, you can see time is around 7:70. Let's look into today's Bank Nifty as well as Nifty 50 trade analysis. You can see this is the 5 minute zone where you need to mark. So if you consider the high to low of this candle, this is the 5 minute zone over here. So first we need to what I usually trade is to mark the 5 minute zone as well as the mid of the first candle. And 200 moving average, this is the weekly pivot levels, and this is the daily pivot level. You can see the market gap down around 200 points. You can see the low to this side. See, it's around 208 points, and the market moved in a sideways manner. And here, clearly, the market actually broke structure towards the downside. This is the break of structure. So, if you consider the order block here, the last up move, you can consider this to be a 1 minute order block. So, the market retraced, broke this towards the downside, retraced back, faced resistance from this anchor day VWAP level, as well as the 9 moving average, as well as this 1 minute order block, and continued further towards the downside. So if you try to plot the common point between this to the common point between this to the common point between this, you could have targeted all the way to 1.68 level here. You can see how the market came all the way to 1.68 level. And this is where you could have exited your position, keeping your stop loss just above this candle and targeting all the way to this low. That's how you could have taken this short scalp, guys. Or you could have exited once after seeing that the market here broke structure again towards the downside, retraced back to this 9 moving average, and should have continued further towards the downside, guys. This is how usually the market behaves, or may retrace back to 50% here and continued further selling towards the downside. But here you can see the market here retraced back, and here it formed a bullish engulfing candle, engulfing the previous candle over here. So, and clearly broke this high as well, forming a clear shift of market structure from bearish to bullish. So this is a chalk formation. So after this momentum, you can see the market retraced a little bit from took support from this 9 moving average and continued further towards the buy side. So if you try to plot the anchor way up levels over here, you can see price taking support over here. Again, it broke structure towards the downside. Again, the market retraced back. So if you try to plot the anchor wave support over here, the high between this to the low of this candle, you can see price taking support from this level here. This is the 550 level. So you can see price taking support from this zone and continuing further towards the upside. So if you try to plot the Fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% movie here. And the next target you could have targeted all the way to 1.68 level over here. And here you can see again the market could have targeted the 200 moving average. For time being, let's see, after this kind of rejection candle, we have exited our long position. So if you consider this swing momentum over here, if you try to plot the common point between this to the common point between this, you can see price taking support from this zero point 0.5 level over here. So you can consider this a 50 level. You can see price trying to take support from this zone. And this is the anchor gap level as well, where price usually showed some kind of support as well. So let's try to take this off. Or you can consider this order block level as guys. You can see the last down candle before the up move, which actually broke structure towards the upside here. You can consider this to be an 1 minute order block. So price here consolidated and again came all the way to 1 minute order block and continued further towards the downside. Before this momentum, you can see the market here clearly broke structure here, forming a chalk over here. You can consider this to be a chalk formation. So if you consider this swing over high, you can find the anchor wave level trying to break towards the upside. So before this momentum, guys, you can consider this high all the way to this low. You can see price facing rejection from 0.32 level, and you can see here how the price here faced rejection 0.38 level over here and trying to break structure towards the downside. So if you consider the common point between this to the common point between this to the common point between this, you could have targeted all the way to this 100% move over here. So this is where you could have targeted exited your position. This is a 100% move, guys. But what we need to keep mind here is that you can see here the trend is kind of showing some kind of bearishness. You can see market even trying to break this structure as well. So what we need to keep in mind is that you can see here also the market trying to break this low, again retraced back, and here it faced rejection from minus almost 20 moving average, continued further selling towards the downside. In case if the market sentiment would have been bullish, the market here retraced to 0.38 level, again retraced, broke the structure of this low, retraced back to 50% and again broke structure towards the downside, guys. And in case after this huge impulsive momentum, there is high chance that the market might continue further selling towards the downside. But you can see price trying to take support from zero point 0.5 levels of this previous bullish momentum and trying to rally towards the buy side. So if you try to plot this swing over here to this blow, you could have marked the zero point 0.5 levels, guys. So you can consider this as the zero point 0.5 level over here. Once if this level is being broken or this high is being broken, guys, better that this high is being broken. So once this high is being broken, then we should look for long sides, guys. As long as this, after this kind of retracement, when price trying to break this low also, usually I take trade after these fib levels when this swing structure fib level is being broken towards the upside. Then I will keep my stop loss below this candle and try to take long position here. This is how I usually trade, keeping my stop loss here and trying to target these swing structures over here. So this is usually how I trade, guys. So one is this trade which you could have taken, keeping your stop loss just below this 50 candle is what I have told you. This is where you could have entered and targeting all the way to 1.68 level over here. This is one beautiful trade setup where you could have taken. And you can see clearly, guys, here the market clearly broke this high. And if you try to plot the common point between this to the common point between this, you can see the market neither retraced back to 0.38 level here, and you can see some kind of consolidation over here and market trying to break structure towards the upside. So you can see this kind of trend line liquidity clearly showing some sign of bullishness after this kind of huge impulsive momentum. Usually price would take support from 550 levels, guys, but you can consider this last down move like this consolidation. So if you consider this down candle over here, so to this high over here, you can consider where the market took support here and try to break structure towards the upside. So you can see this 200 moving average rejection of price here, but here you can see the market strongly broke 200 moving average towards the upside, clearly showing some kind of bullish momentum. So in case if the market sentiment would have been bullish, the market would have really retraced back all the way to this level, guys. This is the day's pivot level, today's pivot level. So a lot of buyers might have entered seeing this kind of huge bullish momentum. So you can see after this kind of huge bullish momentum, the market again rallied back and even broke this low, targeting all those buyers. And this is just a liquidity grab where the market went, broke structure, grabbed liquidity, and continued further, selling towards the downside. If you try to plot the anchor wave up level here, you can see price rejecting over here and continuing further towards the downside. And after breaking this 200 moving average towards the downside, here you can see the market retraced, faced some sort of rejection from 200 moving average and continued further selling towards the downside. So if you try to plot the high to this low over here, the high of this candle, you can see price rejecting from 0.38 level here. This is a 0.38 level where price is rejecting And if you try to plot the fib extinction levels, the common point within this to the common point within this to the common point within this, you can see the market came all the way to this 100% move you could have targeted. Or in case if you could have clearly seen, you could have targeted this order block level, guys. This is the order block level. You can see you could have targeted all the way to this order block level as well. So our entry is important, guys. So our entry with a minimum stop loss is what we are aiming for. So you can see after this kind of rejection candle from 200 moving average as well as this candle, you could have trialed all the way to this order block level, or you could have targeted to this swing low or this fair value gaps over here. You can see this is a fair value gap. You could have targeted anywhere between this zone, guys, or you could have exited. And you can see again the market here faced rejection over here, this anchor VWAP level. So if you try to plot this high to this low over here, you can see this is the 550 level over here, and this is the 550. So this is the 550 price rejecting from anchor VWAP levels, and if you can consider this last zone over here, this is the breaker block, guys. And this is the breaker block where the price here, the last down move before it broke structure towards the upside. You can see here the price is forming some sort of resistance where it formed has support over here. This is the breaker block where the price rejected from price showed some kind of rejection. And if you try to plot the common point within this to the common point within this to the common point within this, you can see price taking support from this 0.5 as well as 0.6 zone over here, or the 1 minute order block. So you can consider this to be a 0.5 as well as 0.6 zone, where price taking support here. And let's take this out, guys. So this is the 0.5 as well as 0.6 zone. This is the breaker block level. This is the 550 level, and you can see the price clearly formed a chalk over here. You can see how the market clearly formed chalk over here. Some kind of bullish sentiment. Again, here the price retraced towards the 1 minute order block, and here you can see the market after this kind of retracement couldn't even break this low. You can see rejection of price from these levels, guys. You can see a lot of rejection of price during this zone. And you can see here it formed a bullish engulfing pattern. Again, the price retraced, again broke structure towards the upside with this another huge bullish engulfing pattern. During this zone, you can see one, two, three, four bullish engulfing patterns, guys. You can see engulfing the previous candle, showing some kind of demand over here. So you could have entered ELJ long position in targeting this swing high structure also. But here you can see there would, in case if the market sentiment would have been bullish nowadays, the market clearly found some kind of support, retraced to the 9 as well as 21 moving average, again broke structure, went all the way to 200 moving average, and it couldn't cross this 200 moving average, guys. You can see here the market faced some sort of rejection of price from 200 moving average. Again, here the same 200 moving acted as some sort of rejection or resistance. So you can see the market clearly broke structure. So usually what I do is that after after this kind of huge momentum where market clearly broke structure towards the upside here, you can see the market clearly broke the structure. And if you try to plot the swing over here, the common point between this to the common point, this is the 550 level, guys, or you can consider this to be the 0.5 levels. So this is the 0.5 level over here. This is the 0.5 where the market clearly broke structure towards the upside. But here you can see the market retraced all the way towards the downside. So you can consider this to be an order block level as well, where the market clearly broke structure. So the last down candle over here, where the market, this is a 550 level, where the market here took support and clearly should rally towards the upside. But here you can see the market couldn't face some sort of rejection candles. If you consider the common point between this to the common point between this, you can see this is the 550 level, guys, where the market faced a lot of rejection of price and 200 moving average as well as this 50 levels over here. One is this bullish sentiment change. This after this kind of bullish sentiment, the market changed its perspective from bullish to bearish here, breaking this zero point 0.5 levels over here, and again retracing back over here, facing some sort of rejection candles after this rejection of price from this 200 moving average, clearly indicating some sort of bearishness. So you could have just taken short position here, guys. If you might have been very vigilant of how the market behaves, you could have just taken the short position, keeping your stop loss just above this 200 moving average. And or in case, guys, if you consider this whole structure as a swing, so if you consider this high all the way to this low, you can see how this acted as the 50 level here. 50 level also acted as some sort of resistance of price where price couldn't even cross this level. The 550 level, the 200 moving average of this impulsive momentum towards the downside, faced some sort of rejection. Again, retraced back, showing multiple candle rejections towards the upside, clearly indicating some sort of bearishness. So if you consider this swing to this retracement, guys, if you try to plot the Fib extinction levels, the high to this zone, to the low of this zone, to the high of this zone. You could have targeted the 100% move or the 1.68 level, or you could have targeted all the way to 2.68 level. But here you can see the market here didn't reach the 2.68 level, but came almost to this level, guys. Or you could have exited once if this 229 moving average or the price trying to break the 21 moving average. That's where you could have exited. You could have just holded on to your trade as long as the market crossed the 9 as well as 21 moving average. Or you could have easily targeted this level, guys. As you can see, this is the 50 level as well as the 1.68 level. So I think you would have made a very good profit over here once if you might have tried your stop loss till this level. So you can consider this 50 level over here as well as the 1.68 level, both which coincides. Or after this kind of rejection of price from 9 moving average, also you could have just holded on to your trade in for another huge momentum like this. And you could have exited somewhere if you find this kind of bullish engulfing pattern. You see, this is a bullish engulfing pattern over here, trying to break structure towards the upside. So if you consider this structure over here, guys, so if you try to plot this swing over here, so the high to this low, you can see price taking support from the 2.36 level over here. This is the 0.23 level. So this level is very important, guys. Whenever you see some kind of demand over here, this is where the price usually takes support. When market is moving in this kind of pattern, where there is no proper sign where the market shows some sort of demand over here. You can see here the market retraced back again. In case if the market sentiment would have been bearish, the market would have clearly broken towards the downside with fair value gaps, like how the market behaved in this way. But you can see the market traded in a channel formation, clearly showing some sign of bullishness only. You can see this kind of trendline liquidity. In case if you know how the market usually behaves, you can see this kind of trendline liquidity after this kind of bullish momentum, where price was not able to take this low. Um, so in case, guys, this 0.23 level, I'll also try to see here also. If you consider this swing, guys, and if you try to plot the common point between this to the common point between this, guys, you can see this is a 2.3 level, 0.23 levels, where exactly where the price here face some sort of rejection over here. This is 0.323 level. You can see this 0.23 level as 350 level as well as 200 moving average of this momentum after this impulsive momentum towards the downside, and this 0.23 level of this momentum where the price retraced here and rejection of price and continuing further bullishness. You can see how the market has behaved, guys. You can see another trend line liquidity over here where clearly showing some kind of bullishness only. This kind of liquidity, clearly trying to break structure. But only this momentum is where exactly the market show some clear signs of bullishness, guys. So you can see this is the break of structure with a fair value gap. And if you consider the large down candle, which actually broke structure towards the upside, we can consider this 1 minute order block where this market clearly broke structure towards the upside. So in case if you try to plot the fib extinction levels, the fib extinction levels of this impulsive momentum, so the common point between this to the common point between this, to the common point between this, you could have targeted the 1.68 level over here. This is where the market came, where some sort of rejection and continued further towards the downside. So this is where you could have exited, or you can consider this kind of momentum here. The last up candle before it broke structure towards the downside, you could have considered this zone as well. So you can see here the market came all the way, or you could have target the 1.68 level, guys. So if you consider the long position here, keeping your stop loss just below that candle and targeting all the way to 1.68 level. This is where you could have targeted. And you can see after this kind of momentum, the market here towards pierced this bullish with a bearish engulfing pattern over here and continuing further towards the downside, guys. But here, what you can see this kind of momentum where price halted anywhere between this zone, guys. You can see in case if the market sentiment would have been bearish, no, guys, with this huge momentum, the market would have easily closed below this zone, guys. This is the breakout structure, or you can consider this to be a chalk. But here the market didn't close below this zone. As you can see, this kind of demand over here. Again, the price retraced and formed some kind of demand over here. In case if the market sentiment would have been clearly bearish, after this kind of huge bearish candle, the market would have clearly broke structure towards the downside with fair value gaps over here, closing below this zone, and again retracing to this zone and continuing further selling towards the downside, guys. This is how usually the market behaves in case if the market sentiment would have been bearish. But here you can see the market after this kind of huge bearish candles continued further selling towards the downside. And this is only to trap all those buyers who might have entered here, guys. After seeing this kind of huge bullish candles, a lot of buyers might have entered here to trap all those buyers. Example, the retail traders, guys. After seeing this kind of rejection candle, this kind of huge momentum, a lot of buyers might have entered to trap all those people. The market to find some sort of liquidity, the market has to come here, grab this liquidity, and continue further buying only. Or you could have considered this swing structure over here, guys, the common point between this to the common point in this. Once if this zero point 0.5 level has been broken towards the upside, you could have taken long position here. So this is a zero point 0.5 level over here of this swing structure. You can see the market clearly broke, retraced back to zero point 0.5 levels and continued further buy side. So if you consider this swing over here, you can consider this high, this common point between this to the common point between this. You can see the market here reach the 1.68 level and the 2.68 level and almost reach the 3.68 level. But let's keep this for aside, guys. So what we need to see is this is where the momentum actually happened. So if you consider the common point between this to the common point between this to the common point between this, you can see clearly the market came all the way to this zone, guys, 3.6 level. This is where the market came all the way to this zone and rejection of price from this zone and continuing further towards the downside. You could have entered another long position here, guys, keeping your stop loss just below this 21 moving average and continuing further towards the upside. So you could have targeted this zone, guys, over here. This is where you could have targeted, or you could have targeted all the way to this level. So if you try to plot the anchor wave levels over here, the last up move candle, you can see price taking support over here, support over here, support over here, and this is anchor VWAP level support as well. This is the anchor VWAP level. This is the day VWAP level, guys. So you can see here, as well as here, the price is trying to take support, clearly showing some kind of bullishness, and the market rallied all the way to this supply zone over here. You can see if you consider this of a 50 level, the market came all the way to that zone. And here is where the momentum actually happened, and further the market tried to continue towards the downside. So if you try to plot the anchor VWAP levels over here, or if in case if you consider this swing structure, the high to this low over here, you can see price rejecting from zero point 0.5 as well as 0.50 levels over here. So in case if you try to plot the fib extinction levels, the common point between this to the common point between this to the common point between this, you could have targeted the 100% move, or you could have kept targeted the 1.68 level. This is how you could have targeted, guys. The short position here, keeping your stop loss just above that candle. And you can see here, guys, this kind after this kind of huge bullish candle over here, this huge bullish candle, the market couldn't cross this 550 levels over here, faced some sort of rejection, continued further towards the downside, breaking this anchor wave level as well as 9 as well as 21 moving average. And this candle is there, guys. This is where you could have seen a lot of confluence, where you can see this candle here rejected price from the VWAP level, the 9 moving average and the 21 moving average, and closed below this zone, clearly showing some kind of bearishness. After this kind of candle, you could have entered short position, targeting towards this liquidity over here. This is where you could have targeted this low. So you can see the market came all the way to this zone. This is the liquidity, external liquidity where you could have targeted. So this was one beautiful trade setup where you could have taken your long position, keeping your stop loss just below that 21 moving average. So in case if you consider this order block level, so if you try to plot this 1.68 level noise, so this is the common point between this to the common point between this to the common point between this is a 1.68 level, the 2.68 level, and the 3.6 levels. You can see how the market here came all the way to this level as well. This is the uh, 2.6 level, and you can see how the market again here to 3.6 level as well of this swing, of this internal structure swing. And if you consider this external structure swing, you could have kept your stop loss below this candle and targeted all the way to this level. So if you consider this external liquidity, keeping your stop loss just below that candle and targeting all the way to 3.68 level. This is quite difficult, guys. This comes with a lot of experience. I think not usually a lot all traders will be able to hold on to your position after seeing this kind of momentum. This momentum you could have easily captured, guys, but you can see how the market trying to rally. I think a lot of you could have taken short trades over here. You can see here you could have taken another trade. You could have taken here. This is 2.68 level. This is the 3.6 target over here. You could have hold it to this level, or seeing this kind of anchor level suppose you could have just hold it on to your trade, expecting the further market to go further high. That's how you could have easily traded, guys. You can see how the market here behaved. This is about my bank nifty trade analysis, guys. And now let's look into Nifty 50, how the market behaved in Nifty 50 today. You can see Nifty 50 though is more bearish compared to Bank Nifty, guys. So here the market gap down around 84 points. And clearly you can see this is the week VWAP level, which is the 200 moving average, 9 as well as 21 moving average. This is the pivot levels over here. This is the VWAP level. Sorry. This is the days pivot level, guys. You can see clearly the market gap down, clearly showing some kind of bearishness. And you can see if you try to plot the VWAP level here, market retraced here, faced rejection from this VWAP level and continued further towards the downside. Again, the market rallied towards the upside and faced rejection from this VWAP level and formed a bearish engulfing pattern. This is where you could have easily taken short position after seeing this kind of bearish engulfing pattern, as well as the 9 moving average confluence, as well as the VWAP confluence, guys. Clearly keeping your stop loss just above this candle. And in case if you want to target, you could have targeted this swing high structure, guys. So the common point between this to the common point between this, you can see you could have targeted all the way to 4.6 levels over here. So you can see how the market came all the way to 4.26. This is where you could have targeted all the way to this zone, guys, of this swing over here. Or you can see this, there was some kind of retracement. So if you see this structure, the high to this low, you can see price rejecting from 0.38 level over here. So you could have just hold it on to your trade when, after this kind of retracement and exited your position or to add on to your position and exit at this zone, guys. So this was a beautiful trade setup where you could have taken. And you can see here the market showed some kind of bullish engulfing pattern over here, clearly showing some kind of bullishness. So if you try to plot this level, the high to low of this candle, you can see price trading above this zone itself over here, clearly showing some kind of bullishness. So in case if you wanna enter long position, you could have entered somewhere between here on itself, or you could have waited for this 50 level retracement, keeping your stop loss just above that candle and targeting this swing high or the day VWAP level. This is where you could have taken another short scalp, guys. And if you consider this swing structure, the high to low of this candle, so if you consider this high to this low, you can see the market came all the way to 550 level over here. This is the 550 level. So this is the 550 level, guys, where the market faced some sort of rejection from this day VWAP level as well as this 550 level. So you can see clearly the market here showed some kind of bullish sentiment over here. If you try to plot these levels over here, the market here showed some kind of bullish momentum. Retraced back again showed some kind of bullish momentum. Again, the market retraced back here, guys. And you can see the market here consolidating sideways. So if you try to plot the anchor wave levels, the common point between this to the uh, for this retracement, if you can plot this levels, you can see the market neither came to 0.38 level. So if you consider this swing over here, you can see the market retraced back to this 0.38 level, clearly showing some kind of retracement and price rejecting uh, from this level, showing some sort of bullishness. So in case if you can see after this kind of bullish candle, you could have entered long position. You can see here the price retraced to 0.38 level, formed a bearish engulfing pattern over here. So in case if you consider this swing after this kind of bearish engulfing pattern, you could have marked the high common point in this to this. So this is the zero point 0.5 levels where you could have marked this level. So once if this level is being broken, you could have entered long position here, expecting the market to go further high. So if you try to plot the extinction levels, fib levels, the common point in this, you can see the market reached all the way to 1.68 level here. This is the 1.68 level over here. So after this 50 level being broken towards the upside, you could have entered long position just on this candle and keeping your stop loss below this 21 moving average and targeting all the way to 1.68 level. You can see here, guys, in case if the market sentiment would have been further bullish, you can see the market tails rallied here, again continued further, could have continued further towards the upside, targeting this kind of liquidity, external liquidities. But you can see after the price reached the 1.68 level of this swing, which actually broke, formed the engulfing pattern with 50 level retracement. This engulf, the market here faced some sort of rejection from the 50 level as well as the day VWAP level and formed a bearish engulfing pattern over here, clearly showing some kind of bearishness. Again, you can see the market took support from 21 moving average, rallied upwards, faced rejection from day VWAP levels with this dodgy candle, clearly showing some sort of bearishness, guys. So in case of this kind of candle you could have seen, you could have entered short position after this kind of momentum, keeping your stop loss just above that candle itself and targeting this swing low. This is where you could have targeted, or in case if you try to plot this retracement, guys, the extinction levels. So if you try to plot the fib retracement of this, the common point in this to the common point in this, you could have targeted all the way to 4.6, 4.2, 4.23 level. You can see how the market of this retracement came all the way to 4.23. Again, the market retraced, faced rejection from 9 moving average and continued further, selling towards the downside. This is how the market behaved, guys. And if you consider the last up move before this down structure, which actually broke structure towards the downside, you can consider this breakout structure with fair value gaps. So if you try to plot the fib retracement levels, guys, if you see, if you consider the common point between this to all the way the common point in this. So this is the common point. You can see the 2.36 level over here, which is very much confluence that the market is very bearish, guys. You can see this kind of rejection, guys, which I have also mentioned you in Bank Nifty. Of this impulsive momentum, usually price might face some sort of rejection at 350 levels or sometimes at 0.38 levels. So in case if you see this impulsive momentum towards say downside, so you can see this impulsive momentum where the market clearly broke. You can see clearly the market is facing some sort of rejection here, guys. This is clearly sign that the market is bearish only. This is a 0.38 level over here. 0.38 level. But what we need to see here is after the price rejected, showed some sort of rejection of price here with this kind of huge impulsive bullish candle, clearly showing some sort of bullishness, but couldn't cross this 0.38 level, formed a dodging, and continued further selling towards the downside. In case if the market sentiment would have been bearish, no guys, after this kind of retracement, rejection of price, the market would have clearly broken this low and retraced and continued further selling towards the downside. That's how the market usually behaves in case if the market sentiment would have been bearish. But here you can see the market here couldn't even cross this low or break this low, guys. Closed below this low is very important. And when the market retraced to this low, you can see a channel formation over here. You can see a sort of channel formation clearly showing some sort of bullishness only, guys. Whenever after this kind of impulsive momentum towards the upside, whenever the price shows some kind of retracement like this with a channel formation, it's a very good sign that the market might break these levels, and you can see how the market clearly broke but couldn't cross this 0.23 level of this huge bearish momentum which actually taken place. Or you can consider this order block level, guys. You can consider this impulsive candle, this PDRA candle. So you could have considered with the better confluences. So you can consider this PDRA candle also. This is the last down candle which broke structure. Or you can consider this candle also. But this was where it showed some kind of confluences. So the price rejected here and continued further towards the downside. So if you try to plot the common point between this, the high of this candle to the low of this candle, you can see again the market face some sort of rejection, multiple wicks rejection from 0.38 level over here. This is the 0.38 level where multiple candles showing some sort of rejection over here. And if you try to plot the fib extinction levels, the common point between this to the common point between this, to the common point in this, you could have targeted the 100% move of this candle. This is a 100% move over here. And or the next target you could have targeted all the way to 1.68 level. This is where you could have targeted, guys, keeping your short position over this candle rejection of guys. Once if this bearish candle found also, you could have entered and targeting all the way to this zone. You can see this kind of retracement, guys, where the market didn't break with a good fair value gaps. So if you consider this momentum over here, you can see the price facing some sort of rejection from 50 levels over here. This is the 50 where price rejected. So if you consider this momentum, the high of this candle to the low of this candle to the low of this candle, you can see price taking support from zero point 0.5 as well as the zero point 0.6 zone over here. This is zero point 0.5 as well as the zero point 0.6 zone, which usually price tends to take support. For this impulsive momentum, this is the 1.68 level target. And you can see clearly after this huge bearish candle formed, the market couldn't make a lower low here and market retraced back towards this zone. So if you consider this swing structure over here, guys, so if you consider this low to this high over here, so let's consider that high. You can see again the market retraced all the way to, so if you consider this high over here, so actually you could have considered this low, guys. This is the low of this swing structure. This is no, not this low. So you can see again the market here faced rejection from 0.26 level. You can see how the market clearly face some rejection from 0.23 level here. This is the 0.23 where the market again face some sort of rejection. But here what we need to keep in mind is that clearly the market here showed some kind of bullish momentum where it actually broke this structure, forming a chalk over here. So you can consider this to be an order block level as well, where it market clearly broke towards the upside. But what we need to keep in mind is that after this kind of impulsive momentum, a lot of sellers might have entered. To trap all those sellers, a lot market rally towards the upside and clearly broke, retraced back, broke structure towards the upside, again retraced back. And in case if the market sentiment would have been bullish, the market could have clearly broke towards the upside, guys. So if you consider the last down candle, which actually broke structure, so you can consider this down candle, which actually broke structure. So if you consider the common point between this to the common point between this, so let's look at the common points. The common point between this to the common point between this, you could have considered this 0.5 level over here, where the price should act some kind of support over here. So in case if the market sentiment would have been bullish after this break of structure, the market might show some kind of support here, like this huge impulsive bullish candles over here, and continued further buying like this. You can see after this huge bullish candle engulfing these previous two candles also, you could have tried your stop loss all the way to this level. Once if this level is being broken towards the downside, you could have entered short position. Or you can see this kind of rejection of price from 0.23 level, which where previously also it rejected price from 0.23 level. Here also the price rejected from 0.23 level, clearly showing some sign of bearishness. And this 0.5 level of this down move where the market broke structure, you can see the market faced some sort of rejection and closed below this 9 moving average, clearly showing some sort of bearishness, guys. I think there are three confluences over here where you could have easily taken your short position, keeping your stop loss just below this candle, somewhere after this kind of momentum, and targeting all the way towards the downside, guys. So if you try to plot the fib extinction levels, the high of this candle to the low of this candle to the high of this candle, high of that candle, you could have targeted the first target to be 1.68 or the second target to be all the way to this zone as well. So you could have targeted to 1.68 level or you could have targeted to the 2.68 level. You can see how the market here came all the way to 2 point. So this is how you could have targeted, guys. As long as the market is trading below the 9 as well as 21 moving average, this is where you could have targeted. And you can see how clearly the market here retraced back. And after this kind of huge bullish candle is where you could have exited your long positions, short positions, and you can see this kind of trend line liquidity, which has been clearly broken towards the upside. And if you consider this break of structure over here with huge impulsive momentum, this is the break of structure. And if you consider the last down candle, you can consider this small candle as the 1 minute order block. So the market retraced to this 1 minute order block and formed another bullish engulfing pattern, showing some kind of demand. So in case if you might have entered long position, you could have entered somewhere here, guys, and keeping your stop loss just below that candle. So if you try to plot the fib extinction levels, the common point in this to the common point between this to the common point between this, you could have targeted all the way to this 200 moving average or the 1.68 level over here. This is where you could have targeted your trade. You can see how the market came all the way to this 1.68 level or broke even the 200 moving average towards the upside, showing some sign of bullishness. But after this kind of bullishness, you can see again the market closed below this 200 moving average and rejection of price from 200 moving average. So after this kind of rejection also, you could have entered short position targeting this low also. So this is how after this kind of rejection and price is trading down, you could have keep your stop loss just below that candle and targeting to this low or this low as well. Or this spring low also, you can see the market came all the way to that zone. This is another scalp where you could have taken, guys, where Here you can see a lot of buyers getting trapped, and here the market came down, showed some kind of rejection from 200 moving average, and continued further towards the downside. In case if you want to plot the Fib levels over here, the high to low of this candle, you can see this is the Fib 50 level, the golden zone ratio, where the price rallied all the way to this zone, and the rejection of price from this level and continuing further towards the downside. This is about my Bank Nifty, Nifty 50 trade analysis, guys. You can see 1, 2, 3, 4, 5, 6, 7 beautiful trade setups where you could have taken positions, showing some kind of momentum. And Nifty 50 as well as Bank Nifty today moved entirely different, guys. The bearish momentums were both coinciding between Nifty 50 as well as Bank Nifty, but the bullish momentums you can see this kind of bullish momentums during the second half of the day from after this kind of huge bullish candle from 1 p.m. If you see in Bank Nifty after this 1 p.m. the market rallied towards the upside for this impulsive momentum of this initial start of this down move. But here you can see the market didn't show so much of momentum towards the upside, only retraced to the 50, wherein Nifty 50, Bank Nifty it rallied towards this zone as well, showing clearly Nifty 50 being very bearish. And this is about my Nifty 50 as well as Bank Nifty trade analysis, guys. Hope I recommend you to clearly watch these videos, guys, because this is very important. You will never find this kind of content in YouTube. I think no YouTuber will teach you in this perfection. So I recommend you strongly to make use of my videos properly for better trades. I think you're getting some kind of insights of how I usually trade. The knowledge I'm trying to share is not readily available in out, guys. So try to make use of this content. And if you find my content really useful, guys, please like, share, and comment, and share this my video to any of your trading friends. So even they're gonna be beneficial. Uh, that's it, guys. Thank you.